Hello, everybody. Welcome to another edition of This Week in Crypto. November 5th is the day. I am Brian here with my co-host Dino. We're excited to jump into another good week in crypto, particularly if you were in altcoins. Small cap altcoins in particular this week were kind of the story. Some much more than others. Loopring, the Sandbox, Decentraland, among those in the top 100 that had a variety of reasons for their respective pumps. Of course, Bitcoin was ranging, at least over the past few days, between 60.5K and around 63K. Ethereum hit an all-time high a couple days ago on Wednesday of 46.56, if I recall correctly, and it is still up just a bit over 4,500 at the time of this recording. And as I'd like to remind everyone, as we do every week, this is a call that is intended to show you guys exactly what our fundamentals historically indicate about the future, based on all of the studies, backtesting, and analysis that we've done in the past. We're going to show as many bullish and bearish divergences based on probability as possible, but by no means should any of this be interpreted as investment advice. With that being said, Dino, I'd love to hear your take on, just how the price action has looked over the past week and what kind of fundamentals you've seen, especially on the Bitcoin and Ethereum side.
Yeah, thanks, Brian. I think overall, the market, specifically, let's start with Bitcoin. So I wrote about Bitcoin 2 days ago. I wrote a weekly report saying that there seems to be rising retail euphoria about the BTC once it broke above 64K again, even though it was only for like a couple of hours. Our metrics picked up quite a bit of a sort of an uptick in a lot of different sort of euphoria indicators. So there have been major spikes in terms of social volume, basically the amount of mentions are related to Bitcoin, in the average sentiment towards Bitcoin, funding rates for BTC. There were several indicators that the retail sector of the market are starting to become a little bit too fired up about BTC for the moment. So that's why in the weekly report I said, look, at least in the short term, until we see the normalization of these signals, I would sort of be iffy about moving forward with any potential sort of entry positions. So far, that seems to have been the case. Since the publication, I think Bitcoin has mostly been ranging. It's down like 1% compared to when I published the article. So overall, BTC has kind of just been fairly boring. Even Ethereum, it seems like people consider it relatively boring, although it's hit a new all-time high. What I like about Bitcoin now compared to 2 days ago is that we are seeing sort of a normalization of some of these concerning indicators, these yellow flags that I've been talking about. It's not all roses. I mean, we're going to go into it over the next 30 minutes, but it's looking decent. Like the question that I posed in the thumbnail of this video is, can Bitcoin's network activity support another all-time high push? And I think if we look into these metrics of it over the last 30 days or so, I think the answer could be yes. It's more nuanced than that, but generally speaking, in terms of network level metrics, Bitcoin's not looking all that bad. Even though, it's losing some market cap dominance to a lot of different coins, but I think that's temporary. I know a bunch of coins pumped because of, Facebook's metaverse announcement, and then we had the Decentraland hit a massive high. We've had Engine, Chili's, a lot of sort of NFT related segments or tokens have had a field day with it. So yeah, Bitcoin is not doing great compared to much of the market, but I don't think it's as bad as it may appear to some. There are some concerning indicators still, but it's sort of a glass half full, glass half empty type of a feel that I have right now, Brian.
Yeah, we're definitely going to go down the list here in just a moment, but I've seen the same thing as you, Dino. Many metrics are showing some bullish divergences with a few concerns on some of the major ones. Mvrv has come back to earth a little bit, which is a good thing. Bitcoin millionaires do appear to be taking some profit, which is a bad thing. But looking at circulation here, it stayed propped up. And sometimes that's the best thing for the markets is, major fundamental utility metrics such as circulation and address activity are staying consistently neutral to mildly high. And that can be a good recipe for the rest of the crypto markets to thrive while Bitcoin kind of stays in one spot. And that's kind of what we're seeing now. It's what we saw toward the middle of the year, right before, or at least around April, right before Bitcoin's initial all-time high and then the drop off. The month leading up to that was a similar situation where Bitcoin was climbing just a little bit and the rest of the altcoins were just going nuts. So I think we can definitely,
Yeah, I think, Brent, this chart in particular, let's focus on it for a couple of minutes. So I've mentioned it in the report. Circulation, for people unaware, is the amount of unique Bitcoins or unique units of BTC that are moving on the blockchain every day. So you see this last spike. I think it happened November 2nd or November 3rd. I'm not sure. November 2nd. All right.
Yeah.
So that's 251,000 unique BTC moving on the blockchain in a 24-hour span. In the past 4 months, basically since May, actually, there have been only 4 days, I believe, that there were more than 250,000 BTC moving on the blockchain within a 24-hour span. So that's sort of just to give some context as far as what we are seeing on a daily basis in terms of daily or intraday value transfer on the Bitcoin network, and also in terms of the total amount of demand for the coin, as expressed by on-chain metrics. Another metric that sort of does the same thing is taking a look at Bitcoin's daily active addresses, right? So this is a metric that essentially shows the amount of unique addresses that are interacting with Bitcoin on a daily basis. By interacting, I simply mean sending or receiving BTC. And it has also had a pretty interesting high a couple of days ago. So either November 3rd or November 2nd, it got up to as high as 1.11 million. So that 1.11 million. So that's pretty dang high. There's only been, compared to the last 6 months, or sorry, the last 4 months, there's only been 6 days that Bitcoin's daily active addresses have gotten to that level. So yeah, it's sort of taken a slight dip in the last 48 hours, but it's all sort of within the, I don't know, predefined model or whatever. It's still decently strong and in an uptrend for me to believe that this is the type of activity that I would like to see moving forward, moving throughout November, if we are to once again contest a new all-time high. So in terms of daily addresses interacting with BTC, the amount of Bitcoin moving on the blockchain, these are all things that have this week, at least at a certain point, hit a pretty substantial high. Although they have slightly dipped over the last 48 hours, this is all still fairly positive. So I would suggest keeping an eye on these metrics sort of on a longer term scale. If we can see these levels and above or higher, continue over the next couple of weeks, it's clearly sort of a bullish sign, I think, for the midterm performance of BTC. Remains to be seen, of course, but this is something that on a very small scale I am seeing these last couple of days, Brian.
Yep, I like to look at the 200-hour trend, which is illustrated by this red line, and we can clearly see that the downtrend was occurring from the drop off in mid-May all the way down to around late July, where it kind of bottomed out, and now we have been on a pretty consistent rise since then. And until we start to see some flattening out, yeah, go ahead.
Sorry, just wanted to start answering some questions in the chat. So we've got a question from Farah saying whether we think there's any risk to market structure due to the 150,000 Bitcoin set to be released into circulation from Mt. Gox Santiment this month. So is that, Farah, I mean, I've been following the news, but the last update that I saw was last week when they said this might happen, but it's not confirmed. Is it now sort of officially confirmed that this is what's going to happen on the 22nd? If so, obviously, I mean, this would be potentially a major event, but it would be something that you can see on the blockchain. So we would be able to follow what happens with these units of BTC once they're released. The metrics that I would on that day or in the next couple of days keep an eye on very carefully would be exchange-related metrics for Bitcoin. So the amount of BTC that is being moved to known exchange wallets. If we see a particularly strong uptick over over the next couple of days after the settlement, or sort of after these Bitcoin are moved back into circulation, then yeah, that could suggest short term a very high spike in sell side pressure, which could impact the market. If not, then maybe those people aren't really interested in selling their BTC right away. It all depends on what we see on the blockchain. But like I said, to me, this whole Mt. Gox thing, it's been dragging on for years. So until I see an official announcement that this is happening on a specific day, I'm just not going to pay too much attention to it. Sorry, Brian, go ahead.
Yeah, going back to address activity really quick. I was just saying that until this red trend line here begins to flatten out or start to go down, it's a pretty good indication that Bitcoin is in a healthy range as far as average 200 hours. So you can't hear me?
You're back.
Oh, strange. I don't know how far back I was lost, but I was just saying, as long as this red line, the 200-hour line, continues upward, generally a good sign. When you start to see some flattening out, could be a sign of a reversal. And if it's going down, that's a worrisome sign that we might be going into another bearish cycle, even if it's just a short or midterm one.
Yeah.
So that being said, before we go into the other metrics, I just want to give an update on the NVT model as well related to token circulation. What this model calculates is the amount of unique tokens moving on the BTC network or other assets, which we have down here available, compared to the respective market cap of Bitcoin or other assets at any given time. And what we've seen after this 7-month stretch of red, which created a lot of volatility due to the fact that circulation was not quite up to snuff compared to where market cap was at the time, we are now in our first green bar, at least the first 4 days of November, which we have full days of data on. First time we've had a full green bar since December 2017. That being said, don't hold your breath because we are in a very small sample size for the month right now. But taking it for what it is, it's a very good indication that circulation is in a healthy spot. And like we said, when Bitcoin is staying propped up due to metrics like this, it's good for all of cryptocurrency. So very good sign here. And if we do start to fade, take that with a grain of salt too, because we did have a few months of red here in July, August, September, where the price was kind of able to rise anyways. It had some volatility in between for sure, but we made the new all-time high as soon as October hit with the semi-bullish bar again. So all things considered, if you look at the history of this chart, greenish yellow and green are always a good sign.
Yeah, so essentially what this chart is showing, just for people that might not be fully aware with how we calculate this metric, it's very simple. You take the market cap of a coin and you divide it by the total amount of unique units or tokens of that coin that are moving on the blockchain daily, right? So if the market cap is too high relative to the amount of value transfer on the network, or relative to the amount of tokens moving daily, then that would mean that the network might be a little bit too overvalued. And so this is where you see these red bars on the chart. And then if the market cap is too low relative to the amount of value that is being transferred on the blockchain daily, which seems to be where we're at right now, then this chart would say we might be a little bit undervalued, right? So keep all of that, like Brian said, with a grain of salt. It's only been, I think, a couple of days where we're seeing this very strong green bar. All that really means is that in the last maybe a week or so, we have seen a pretty significant uptick in token circulation. I would still, keep an eye on it for another week or so, just to make sure that this is not like a solitary blimp, and in fact, it is a sort of a sustained uptick in the network activity. But overall, still a relatively hopeful sign, right, Brian, in terms of where Bitcoin might be headed next.
100%. Yeah. As long as we are in green or yellow-green territory, it means that the market cap is justifiable based on the amount of unique tokens. So even after this weekend, where we'll likely get, some higher higher ratios, which would be a bad thing, I still don't think we're going to get past semi-bullish territory. So come Monday, if you're checking this chart, you'll likely see it in a very similar spot to where it ended in October. And a continuation of October is just fine by us in terms of prices being able to rise, not just with Bitcoin, but all over cryptocurrency. So heading back to our main Bitcoin chart, why don't we take a look at MVRV here next, Dino?
Actually, before that, we might want to just briefly touch on the mean dollar invested age, because I think it's more connected to what we're now talking about, right? Yeah. So I use this as a thumbnail for this video, this particular chart that Brian is just showing, which is showing the mean dollar invested age for Bitcoin sort of taking a pretty notable dip over the last, well, basically over the last 3 weeks, really. So for those of you that are not familiar with what mean dollar invested age does, essentially what we do is for each unit of Bitcoin, we determine how long it has stayed in their current address. Then we compute the average age of all those addresses, and then we adjust it by the price at which each unit of BTC was last moved on the blockchain. So for in very simple terms, what we end up seeing, or sort of what ends up happening, is that these prolonged rises in Bitcoin's mean dollar invested age slope. So when these massive sort of upward slopes in mean dollar invested age point to a period of time where the average age of BTC on the blockchain is becoming is increasing, or basically units of Bitcoin are becoming quote unquote older. What that simply means is that on average, there's not a whole lot of interaction of BTC between network addresses. Network on a whole level, on a network-wide level, we're seeing a move towards dormancy, right? So these rises point to a period of time where the network is moving into a more dormant pattern, and then these drop-offs, and Brian, maybe show us the last like 5 years or 6 years of data just so we can see what happened during the previous market cycles. These large drop-offs in Bitcoin's mean dollar invested age, like we can clearly see here, they point to a period of time where the average age of BTC on the blockchain is becoming younger. That means that there's more interaction between BTC addresses. There is more daily, essentially, value being transferred between Bitcoin addresses. And on a network-wide level, that seems to be or have a relatively positive impact on the price of BTC. So generally speaking, large slope or sort of rising slope equals period of dormancy, or sort of hodlers, mostly being the ones that are dominating the narrative, and then large declines in Bitcoin's mean dollar invested age point to period of redistribution between different stakeholders on the Bitcoin network. So we have seen these large drops in mean dollar invested age before. We have seen them in 2017, 2019, and the sort of beginning of the bull rally in 2020 as well. So generally speaking, these massive drop-offs in Bitcoin's mean dollar invested age seem to coincide with sort of the middle of the rally, and it suggests that people are now starting to redistribute their BTC, and in general, this period of increased network activity seems to do well for BTC's price action. And then when we see Bitcoin's mean dollar invested age stop falling down and start moving in the upward direction again, that usually points to a period, sort of an end of the redistribution cycle and a move into network-wide dormancy. And previously in 2017, or actually early 2018, in 2019, as well as shortly, at least in 2021, these sort of bottoms of Bitcoin's mean dollar invested age have coincided with a period of price depreciation. So this is why I think it's quite interesting that in the last 3 weeks or so, we are finally seeing this macro indicator turn into the opposite direction, turn downwards. What that would suggest is that once again, we are seeing network-wide effort to redistribute Bitcoin. So there seems to be an increase in daily value transfer, which we have seen in terms of rising daily active addresses and rising token circulation. And as a result, it might point to a healthy network. Previously, it has pointed to a general sort of generally active and, on a network-wide level, a healthy amount of value transfer that is needed for sustained price rallies. That being said, it's still very early. Like this is a very much a macro indicator, a long-term indicator that you use on sort of a yearly or bi-yearly scale. So the fact that it's only been a couple of weeks, take it all with a grain of salt. But it's something that we've been sort of paying close attention to over the past couple of months. And even though a lot of Bitcoin sort of metrics have been moving into a bullish direction, this one has not. This one has continued to move into the upper slope, suggesting that, you know, on a general wholesale network level, people are still hodling and there's not a whole lot of interaction between addresses. Finally, we are seeing that a switch in the mind of BTC holders. Whether that's just a temporary switch or it's just the beginning of a longer-term downtrend in this metric remains to be seen, but it's certainly something notable to talk about, right, Brian?
100%. Yeah, we get many questions about which of our metrics have some legitimate alpha or leading indication to it, where you can see a turning point and then you can react to it by knowing that price will likely go up or likely go down right afterwards. And mean dollar invested age is one of my favorites because of the fact that it doesn't just shift directions on, you know, the snap of a finger. There's usually just a bit of a flattening out period here, whether it's going up and then halting and starting to go down, which would be a very good indication that price is about to take off, like it did in late 2016, or the opposite, right? If you were looking at mean dollar invested age around mid-December 2017, the first you know, I guess, real big bull run that happened that the crowd and the mainstream media started to pay attention to. This flattened out here, and we could see that that's when price topped out and started to go in reverse. And we can see most recently, you know, in April, right when we hit that initial 64K-ish all-time high, big flattening out period where you had some warning right here at the top, even right before the top, it was starting to flatten out. And then most recent, I guess even more recently, about a month ago or early October, we had this flattening out period here where we were bottoming out. We hit, you know, down to the low 40Ks, and suddenly we're going back down. And if you saw this initial flattening out period, it was a pretty good indication that a reversal could occur and we would rocket to, you know, at least back to where we were in April and May. And it ended up exceeding that and hitting a new all-time high. So we definitely love mean dollar invested age here. And it's still a relatively new metric that we're still trying to optimize and get better and better. But yeah, Dino and I and the rest of our team love it.
So YP is saying mean dollar invested age is more like a confirmation indicator. It is lagging to short-term price. I would say that's fair. I actually think usually, like if you look at it, YP, if you look at this metric in the previous couple of cycles, it doesn't start declining at the start of the rally. It actually starts declining at sort of a middle of the rally. So It's certainly not like always going to mark the beginning of the rally for a coin. It's actually usually already the rally is already well underway when we're starting to see this period of redistribution. So yeah, I would say it's certainly a confirmation indicator from that sense. Still, that being said, you know, when you see sort of a strong decline in the mean dollar invested age, there's still usually some juice to be extracted from the rally for yourself. Now, at this point in time, I would definitely say way too early to call it a massive drop, but you know, keep an eye on it. Next couple of weeks, we're going to be talking about it next week. We're going to be definitely making sure that this is something that's going to be staple in Bitcoin's network metrics over the next couple of months. If it is, I mean, yeah, could be fireworks for BTC. We'll have to wait and see. But yeah, Brian, we can move on to MVRV now, just so we can cover as many metrics as possible.
Let's do it. All right, MVRV 30 days here. So the golden rule that we have had with MVRV on the 30-day time scale is danger zones occur at plus 15% or above, which we are not in. Let me straighten that line out. There we go. Or opportunity zones occur at around negative 15%, give or take right about there. And we recently hit that back on, it looks like October 20th was the last time we were in that danger zone. And if you see the crosshair, which is very faint, I'm sure, on your screen, but I can see it pretty well. This actually coincided with the exact day of the all-time high. And once it crossed into that danger zone, this would have been a pretty convenient indication that we were going to at least have a mild correction, which we did. It was a mild one, got down to a little below 60K before bouncing back up. And now we're sitting at about neutral. We're just at about 0.1%, which is about as neutral as you can really get with this kind of metric. And it's indicative that people have taken a bit of early premature profit, a little bit of FOMO that happened maybe around 63, 64K, where some traders are actually down a bit in the short-term time scale. But overall, the 30-day MVRV indicates we're just about neutral here, Dino.
So exactly. At the moment, the average profit of all addresses that have acquired Bitcoin in the previous 30 days, which is what this metric tracks, is around 0. So around break even. Generally speaking, the way that people use this metric is the higher the MVRV ratio is, that means that the higher the average profits of that particular group of holders is. By that logic, the higher the average profits are, the more risk there is that they are going to start claiming some of those profits. As a result, there might be an increased sell-side pressure as the MVRV ratio rises. So like Brian said, between 15 and 20% usually seems to be a period where short-term Bitcoin holders like to take some profits. So you will see here that there have been periods or sort of times in the past where Bitcoin's MVRV ratio, this 30-day MVRV, has spiked above this level between plus 15 and plus 20%. Like it's grown to as high as I think plus 40% at some point. Usually, that does not last for more than a couple of days. So even when we see these massive anomalies, what they really tend to point to is the fact that the market is becoming overvalued and slightly unsustainable. So it all comes down to your risk profile. But generally speaking, for me, that is relatively risk averse. When I see Bitcoin between sort of 15 and 20%, I wouldn't wait for it to sort of cross even higher, even though it could technically happen. I think generally speaking, that's a period of time where we are becoming a little bit too greedy for our own good. So now we are back into the neutral territory. This is not necessarily the best opportunity to accumulate BTC according to this metric, right? So according to MVRV, the lower it is, the more opportune time it can be to accumulate. So there is still quite a bit more to go on the negative side of this chart before we can clearly say that according to this metric, at least, Bitcoin is in the undervalued territory. So I have seen some people talk about 57K being the support level from a technical perspective. I think that also makes sense from an MVRV perspective. I think that if we were to drop from here to 57K, the 30-day MVRV ratio would drop to between minus 8 and minus 10%. That would be, historically speaking, quite an interesting zone to potentially accumulate some BTC. So we'll see whether that happens or not. The only thing that I can say for this particular chart is that at this moment in time, there is room to both sides, right? So there is still, we're definitely looking healthier than we did 2 weeks ago at the all-time high. So there's now room for Bitcoin's price to grow before we hit that overvalued zone once again. However, there's definitely more room to the downside before we can call it clearly undervalued. And then as far as Bitcoin's long-term MVRV ratio is looking, Brian, it's looking a little bit more concerning. So if you take a look at the average profits of those addresses that have acquired Bitcoin in the previous 365 days, so essentially a longer term MVRV ratio, it is still at about 35%, which, yes, relative to bull cycle highs, it's not the highest ever. It's not in that danger zone. However, it's certainly moving or inching into that direction. So, there's clearly more profits that can be taken by these long-term Bitcoin holders, especially if they believe the market is becoming a little bit too unsustainable. So this is a slightly more concerning chart, right? Even though I would say that, it's still looking healthier than it did 2 weeks ago, there's more room to the downside to be had potentially. So this is currently sort of an in the middle of the street indicator, and I would just simply use it in conjunction with other metrics to really make your decision, if anything else.
Yep. I'm totally in agreement with Dino here. It's on the 30-day, we're pretty much as neutral as we can get. 365-day, we continue to be a little more bearish than average, but not in any sort of concerning danger zone like we saw where it was over 100% in February or December, or going all the way back to June 2019. Those would be the last 3 times we really were in clear danger zones on the long-term chart.
So, Brian, I think last thing to do with in terms of Bitcoin's on-chain data is to look at whales. And then we can talk a little bit about its off-chain metrics. But I think whales are quite interesting. I have a few things to say about this chart. So yeah, let's see what's going on.
Let's go last year.
Yeah. So tell us what you're showing.
Absolutely. So we are looking here at the cumulative percentage of supply for all whale addresses holding between 100 to 10,000 Bitcoin at any given time. Right now, of course, 100 Bitcoin would be worth just about give or take 6.2 million, and it goes all the way up to 600.2 million. So these are very large Bitcoin addresses, and as you may expect, they have a very large influence on where price direction moves next. You can clearly see the correlation between, you know, their supply going up and then price following. Same here when they actually dumped some Bitcoin from about a week before the all-time high all the way until, you know, May 22nd or so. Look at how the price declined, and it did so a little bit after the dump started too. So this is alpha territory we're looking at right now. Our latest points of interest would be from about October 24th all the way up until today, where these holders have actually dumped about 0.9% of their total supply, and
it's roughly
I can take a look at
70,000. It's roughly 60 to 70,000 BTC.
Gotcha. So 60 to 70,000 BTC is no joke when you think about just how much USD value that really is, and it's indicative that there is some profit taking going on. It's not quite the long-term stretch here yet. There would be a real concern, but as far as concerns go, this is one of the bigger ones we've seen in quite a while as far as whale behavior. We last saw this kind of around early to late August, and then we kind of had a little bit of exchange shuffling going around. There was a bit of a false signal here, but all things considered, this is a pretty similar behavior to what we saw just about 2.5 to 3 months ago, Dina.
Yeah, so certainly a chart that's a little bit potentially, I will say, concerning. It seems to indicate a lack of confidence by some large addresses, Bitcoin addresses, even though the price of BTC is continuing to recover. Now, there's a few things to mention here. So if you look, Brian, at the one category above this one in terms of Bitcoin's holders. So currently we're looking at all addresses that are holding between 100 to 10,000 BTC. So that's quite a large range. And you can actually leave that one, that range, Brian, just so we can compare it, right?
Sure.
So yeah, so if we're trying to figure out where this money is going or where these funds actually tokens are moving, it seems like they are moving to the category above it. So there seems to be a mirror increase in the holdings of addresses that are holding between 10,000 and 100,000 BTC. So now you might say, well, this could be even greater whales, right? The thing is, if you look at the, and you can actually show it, Brian, here, if you show us the number of addresses that are holding between 10,000 and 100,000 BTC, you will see that there's not a whole lot of them. And they are likely, in my at least experience, dominated by exchange wallets. So if you take all of those out, and you will see only 84 addresses that are holding between 10,000 and 100,000 BTC. There we go.
Right there, yep.
84. So it's not, it's not sort of a large conglomerate of addresses. And generally speaking, I think, obviously, there's some assumptions here at play. However, we are also at the same time seeing a slight uptick in the supply of Bitcoin on exchanges, which might suggest that this rise in these addresses and this decline in addresses below this level points to a little bit of sell-side pressure by whales. So yeah, it comes down to how comfortable you feel with who is actually dominating this largest echelon of addresses between 10,000 and 100K. I would say that it's most likely not like individual addresses and wallets. I think it's either massive custodians, but usually they sort of shard their wallets into a bunch of them, or it's exchanges. So yeah, this is why I think it's slightly, to me, or potentially concerning that this last group of addresses is actually growing in terms of their balance sheet, because it might suggest a movement of funds to exchanges. So yeah, that's it as far as on-chain data is concerned. Brian, maybe Max has already set up a poll, so guys, you can vote in chat for coins that you want us to look into after this part of the presentation. So we're going to take a couple of more metrics about Bitcoin, specifically its off-chain metrics, and then we're going to take questions from the audience. So any coins that you would like us to analyze here live on stream, let us know in chat. As I always say, bonus points if the asset that you want us to look into lives on Ethereum. And we currently have on-chain data for Bitcoin, Ethereum, all ERC20 coins, XRP, Litecoin, and a few other coins. But we don't have like full on-chain coverage of the entire crypto market, because that would be impossible. We are still by far the largest sort of on-chain data provider out there on the market. We currently, I think, cover about 1,200 different coins from an on-chain data perspective, but not all of them. So if it's an ERC20 coin, we can look at more data than usual. Even if it's not an ERC20 coin, we can look at things like social metrics, development activity metrics. So there's still interesting stuff that we can keep an eye on. But yeah, on-chain data-wise, make sure that it's an ERC20 asset. So Brian, talk to us a little bit about social metrics for BTC, because they've seen some very spiky behavior these last couple of days, which got me a little bit concerned about BTC in the short term. I'll be right back. I'm just gonna get some water for me.
No worries. Yeah, so what we're looking at here, guys, first in this light blue is the social volume of Bitcoin over the past year. This is the scraping of the raw amount of mentions of Bitcoin or BTC on our combination of platforms that we have public tracking on, being on Reddit, Telegram, Twitter, Discord, and pro traders chats. Over time, generally when you see these large spikes, it's an indication of either euphoria or fear, one or the other. And generally over the last year, we saw our biggest group of spikes happen as the price was dropping off a cliff, and there was massive polarization, many traders thinking this was the dip to buy, many traders saying that this was the dump that would continue downwards for a long time. Obviously, it was more of a dump than a dip buy, at least for a couple months after. But long story short, when you see groups of social volume spikes, that's an indication of a potential turning point, not just for Bitcoin, but any asset that you look at on our charts. And honestly, the smaller the asset, the more valuable something like social volume and dominance is, because those small assets are rarely talked about unless there's some significant fundamental event or some price action that's bringing the crowd interest over to it. But even for Bitcoin, we see like these pairs of spikes here, these pairs of spikes that occur right at the all-time high. And then we recently had our largest social volume spike since May that occurred right at the top. And it was mostly people getting euphoric again, thinking that we were going to go right back to the all-time high we just saw a couple of weeks ago. And of course, that didn't come to fruition, at least not yet. And these are the kinds of things to look out for. When the crowd starts to become overly interested and talk about Bitcoin at levels that really aren't usually seen, that's the time where you'll see some turning point. So right now, we're actually in a very mild slide. If the slide continued a little longer and we started to see another spike, or even more interesting would be a couple spikes or group of spikes, that would be the indication that we might bounce right back up because the crowd is starting to get fearful. So that being said, we also have this metric here known as social dominance, which essentially is what social volume is, except it's the percentage of these social volume spikes versus all of the top 100 assets and their mentions in terms of where, you know, Ethereum and Cardano and many of the hot assets that are commonly talked about, when those are talked about more than Bitcoin, you'll see this social dominance spike go down, or line go down. I'll take off social volume so it's easier to see. So, you know, here especially, there was so much interest in altcoins dumping that Bitcoin started to get less attention. And then we have seen quite the downfall between October 19th, right before the all-time high, and now, where really we're at levels that we haven't seen since early May. And this was prior to the price dump that occurred when we were still up around 58K at that time. Generally, when social dominance drops and really gets below, you know, like 15% like it is now, it's at about 13, that's an indication of a potential turning point as well, whether it's going to the down end or the rising end. You can see down here back in December 2020, there was a similar downfall, probably way to a larger degree because Bitcoin was really being talked about a lot back in November. And when we started to see these really low spikes, the price of Bitcoin started to take off because there was very little interest. And at that time, we were actually falling a little bit. You can see here in just this 2-week period how we were starting to drop and people were not that interested because so much attention was on altcoins in November and early December. And suddenly Bitcoin takes off and has its own run. And of course, altcoins eventually came and followed suit. But you can see a similar thing on the other end where we were starting to rise and interest of Bitcoin was starting to fall because we were getting, at that time, a ton of Dogecoin interest and just general altcoin interest, especially some smaller caps that weren't normally getting attention. So Bitcoin was kind of being ignored, and all of a sudden it drops off a cliff with the lack of interest. And of course, the rest of the cryptocurrency sector falls along with it. So all things considered, we're in a pretty low range, and this could be indicative of a big turning point one way or the other. It's difficult to decipher which, but this likely will foreshadow some future volatility that I would expect in the next couple of weeks. You know, if you're back, feel free to give your take on dominance and volume here.
Back. Can you hear me?
Yeah.
Yeah. So generally speaking, the reason why I think we've seen this spike, I mean, social dominance, it actually looks quite mild. When you look at social volume and social sentiment, it's actually it was quite massive. The reason why I think it happened is because there was a breakout from this sort of a technical analysis channel, right? So if you drew a line from all of these stops between October 20th and November 1st, they would form this line which got broken on on November 2nd. So once Bitcoin broke the 64K level, this was the time that channel got broken. So a lot of people got excited because it would suggest a bullish divergence. And this is where we saw this massive spike, this last massive spike in social volume. So if you look at social sentiment, what also got me quite worried is that it has been massive. The amount of positive sentiment towards Bitcoin on November 2nd was very, very high. It was actually sort of the same levels that it was during the all-time high back in October. So generally speaking, we've done some backtests on our social metrics. When a coin's price is rising and we see a coinciding or sort of correlating rise in social metrics like social volume and sentiment, it usually suggests there's a peak market euphoria, right? There's a lot of people becoming irrationally confident about that coin, and as a result, we might have a increased risk of short-term correction. So the fact that we have seen this type of activity for Bitcoin over the last couple of days has gotten me a little bit concerned, and it's also fair to say that it's not just the retail crowd that is potentially bullish on BTC. We are seeing quite a lot of increase in funding rates for Bitcoin as well. I think Brian already has a few charts set up there to show you where both on Binance and FTX, on OKX as well. Last couple of days, there has been sort of an uptick in the funding rates for Bitcoin. So what funding rates are, it's a fee paid by one side of the perpetual contract to another. Essentially, when the funding rates are high, that means that Bitcoin longs are paying Bitcoin shorts, and the derivative market is bullish on average. And then when the funding rates are low or negative, that means that Bitcoin shorts are paying Bitcoin longs, and the market is bearish on average. So the market currently, the derivatives traders seem to be quite bullish on BTC, and the retail crowd also seems to be quite excited about BTC. Now, the situation is starting to change. The last couple of days, we are seeing a little bit of a normalization of these metrics, but I am still a little bit spooked by this. I think generally speaking, I don't like, talking super positively about BTC when these off-chain indicators are high, because it suggests that the market is already quite aware of the potential of Bitcoin and is actually quite excited about what might happen next. When the market becomes very excited about what might happen next, it's usually not a great sign for the price of that particular coin. So like I said, the last couple of days, we are seeing social volume decline. We're seeing social sentiment decline. Currently, both for Bitcoin and Ethereum, sentiment is back down to neutral to bearish. So, it's starting to fizzle out. This like short-term excitement, this channel being broken, it's starting to fizzle out. But I'm still a little bit on the fence as far as these metrics are concerned. The funding rates are actually also relatively concerning to me. It's not just one exchange, it's most high volume exchanges, except maybe for Huobi, and now FTX, I think, has normalized as well, that are still seeing a little bit of an uptick in terms of funding rates. So, the market isn't bearish, that's for sure. It seems like the market is quite ready for BTC to burst out, prepare or sort of manage to break a new all-time high, and then even maybe get to 70K and above. So given the market expectations seem to be a little bit outsized, I would suggest a slight caution. And in general, over the next couple of days / weeks, I would suggest keeping an eye on these charts. Once they completely normalize, and once we see the average sentiment of the crowd move back to bearish, yeah, it's a better territory to be at if you're considering an opportunity, sort of a potential entry position. Right now, it's still a little bit overvalued for my taste, but it's everyone's sort of risk profile is different, I guess.
Yeah, so, Dino, you and I were talking right before the call about how we might be missing just the latest bar for Binance, but it actually did tick right back up to about 0.4%.
Yep. So Binance currently here, it looks like it's around 0.02. Actually, it's currently at about 0.045%. The last tick of data is going to be updated, I think, very soon. So just keep that in mind. It's there's one tick here missing, and the devs are aware of it. So, okay, I think we're already 45 minutes in. Time for questions. Max, we've got people asking a bunch of different requesting a bunch of different coins. What do you think? What are the most requested coins? What can we look into? Maybe preferably something that we have a lot of data on, but not necessarily.
Right now, we have 3 assets tied for the first spot. That is ICP, the internet computer, which we don't have on-chain as far as I know. And then it's Chainlink and Strong token.
Okay. I think we might want to, I mean, let's look at ICP just because I was in Switzerland last week on a Crypto Valley conference. We were doing a sort of a presentation on sentiment metrics and how to use them to sort of figure out what might be going on with the market, especially when it comes to on-chain data. And I've had a lot of people, I mean, a lot, maybe 5 different people, but from like 5 different projects. So to me, it's quite significant. Talk about ICP, and maybe I was in a bubble of my own, but generally speaking, I have not really heard the people talk that excitedly about ICP for a while. There were different projects talking about how they're building on ICP because it's more decentralized. It seems like there's quite a bit of sort of hype around this project, not the coin itself. Nobody talked to me about the coin. They were just talking about the internet computer. So yeah, with that in mind, I mean, I guess I'm not surprised with this spike in ICP's price action. I'm not sure if there was any announcement. I wasn't really paying attention to internet computer in the last couple of days. So let me know if there's somebody in chat that knows what is the actual reason for this rise in price. But regardless of what it is, we can at least look at social metrics for ICP, right, Brian? And you're already sort of highlighting the fact that we are seeing a massive spike in social volume for ICP. It's actually maybe the highest in the last 3 or 4 months, right?
Yeah, last time we got to this level was in mid-August. So we're looking at a closing in on just about 3 months since we last had this much chatter about ICP.
Can you show us the last year of data or something, just so we can kind of get a bit more context about ICP's social metrics? Okay. Yeah, so this is where we are right now, and obviously, the May all-time high has done quite a number on its social metrics. But generally speaking, I think this is, I mean, I would say the same thing that I'm saying about Bitcoin. When an asset's price rises, especially when it rises aggressively and sort of somewhat unexpectedly, and then you see these pretty significant spikes in social metrics, that typically means that the crowd is becoming hyper aware of the rally. Right. So if it's becoming hyper aware of the rally, it's also relatively becoming irrationally confident about that coin's performance. We're going to see a lot of shilling of ICP happen. I think it's already probably happening. But that also all means that there's going to be potentially less buy side pressure moving forward, because everybody that wanted to get in on this trade is already aware of the trade happening. So it's not necessarily a sort of a nail in the coffin for ICP, but it could mean that there is maybe a potential or increased risk of a short-term correction for ICP. So just enough for the crowd to dissipate, to move on to other projects before we can see ICP once again sort of sustainably move in the upward direction. So right now, this spike in social dominance is the highest one in 4 months. It's rubbing me the wrong way. But if you look at Solana, it's had similar spikes in social volume, and then it had a bunch of different spikes in social volume along the way of its rally. Each of those spikes have coincided with a short-term top, and then the price drops a little bit, and then we have another leg up. So it's not necessarily the fact that ICP sort of is done with its rally. It is, however, slightly concerning to see so many people currently being aware of it, and I would proceed with caution. I don't know if we have development activity data for ICP, Brian. Can you check?
We do.
Okay.
Let me already mention the winner so far in the poll is Chainlink for next assets.
Good. Okay. Yeah, ICP integrated with BTC smart contracts. That's what I've seen people talk about on this conference as well. So if that's the only thing that's been new, I guess I was already aware of it. It's interesting that it's just now pumping, because I think the announcement or sort of the rumors were already flying high last week. So, okay, cool. This is the development activity. So, Brian, I can't see exactly what is the actual value here, the last value?
So latest value is about 36.6 on the development activity, 12 hours.
So that's not going to mean a whole lot to a whole lot of people, because it's just a proprietary value that we've made for this metric. So let me first explain how we calculate development activity. So what we do is we basically scrape thousands of public GitHub repositories. So if a project has public GitHub repos, we scrape those repos and then we clean this data. So we exclude all non-development or non-code related events. So any sort of stars, comments on code, those types of events from these GitHub repos are excluded, so that we can level the playing field and focus on only development related events in a project's GitHub repo. So what we sort of end up with is this sort of chart which shows the average, actually not average, shows the total amount of resources, I guess you could say, that a project has invested in its coding manpower based on publicly available information. So 36 is something, it's just a sort of value that we've attributed to this way that we clean the data. But I can say from my own experiences that 36 is actually relatively high for a sort of on a monthly scale. Usually for like ERC20 projects, we see them typically peak between, let's say, like 30 and 60%, 30 and 60 as a value. So there seems to have been quite a big dip over the last previous couple of weeks. Maybe it's because they were on the conference with me, because a lot of people were talking about them. So I don't know, maybe they were in Switzerland. I mean, it seems like it's exactly the time that I was at that conference that they've had a big dip in development activity. Who knows? Who knows? Generally speaking, it's pretty clear that the project is pushing code. It's not sort of on Cardano's level. Like if you look at, Brian, show us Cardano, which is like one of the, in terms of development activity, Cardano is usually sort of really leading edge, at least based on publicly available data. So if we look at Cardano, yeah, let's see. So what's the...
This is them on the shared axis. So it's, as you can see, it's not even close.
Yeah.
Because Cardano's is at 166 compared to ICP at 36.6.
Yeah. Oh, I know what the drop is. This drop is actually, we've let people know in the intercom about this drop. So we are recomputing some development activity data over the last couple of weeks. So this drop might not actually be completely legitimate. Just keep in mind, if you go through the changelog on our Discord, and you should have received the message in the, if you're using Sandbase, we are recomputing development activity data for the last couple of weeks. So it's actually probably not even this shallow of an activity. It's actually probably fairly consistent. But yeah, you can compare it to the Cardano, which is now at what, like 170 or something. So
166.
Yeah, and this is, I think, one of the sort of leading, in terms of public GitHub repositories, Cardano usually is like the most developed or most actively developed project on a yearly basis, right? So it's nothing to scoff at. So this is like the upper tier of projects in terms of development activity. ICP currently, it's sort of in the very middle. It's a very decent mid-level, scope of projects. So projects like, I don't know, PancakeSwap, MDEX, I've seen a similar activity, Engine, OMG. So these types of projects all have this level of development activity, which is fine. I think it's decent. So it's nothing like, this is not going to help you determine whether tomorrow ICP is going to pump or not, but I think it's a good metric to just let you know whether the project is actually still pushing code, whether it's still staying true to the roadmap that they promised or not. ICP or Internet Computer definitely is. So yeah. Let's move on to Chainlink. I guess my closing thoughts would be proceed with caution as far as ICP is concerned. These spikes in social metrics are rubbing me a little bit the wrong way. It doesn't need to mean that it's going to drop immediately, but it might suggest there's an increased risk of short-term correction. So yeah, we'll see. We'll see what happens. All right. Chainlink, right? Okay, cool. So Brian, yeah, show us a little bit of just general on-chain activity for Chainlink, like active addresses. What are we seeing? Network growth. Is the amount of people and addresses and entities interacting with Link growing, or is it sort of lethargic? What's been the situation?
Yeah, circulation-wise, really quick, as far as unique tokens swapping addresses, nothing special going on. It's been pretty flat now for a while, ever since it kind of started to decline in mid-July. As far as address activity goes, we are seeing a very mild rise that's happened in the past month, but nothing to really write home about. The big peaks really occurred, as you would expect, in both February when it hit its first all-time high, and then it had a very brief peak in May when it hit its last all-time high. But price has been on the rise despite address activity staying about flat. And you can see on the 200-hour trend line that it's pretty much as flat as can be, not declining and not rising. So all things considered, this would be a bit of a bearish divergence just on address activity alone, due to the fact that price, ever since mid-July, we can look at the bottom here on July 20th, the price has jumped 137% in the past, what would we call that, about 3.5 months. And address activity in that same stretch has going from the trend line, it's down about 33%. Overall,
it depends,
it's down just 10.5 from where I started.
It really depends, yeah, where you started, where you end, but it's kind of along that same level. So it's been plateauing mostly, right? Still, it's relatively high, right? How many addresses is that? 5,000 and something?
Yes, 52.58.
Yeah, I mean, that still puts Link in like top 5 coins that are being used on the Ethereum blockchain. Actually, I'll check while you check other metrics. I'll check how many coins are actually on Ethereum are seeing at least 5,000 addresses using them on a daily basis. I would bet a good money that it's not more than 10. So yeah, keep going, Brian, and I'll check it out while you talk.
Yeah. So funding rate, Binance, it was a little high up here at about 0.028, but it's dropped back down as of late, and it's sitting at about 0.02. So just a little under 0.02 on the Binance side, and on FTX, 0.0027. So nothing special here. You can see when it really gets high, you know, Binance hit all the way up to about 0.27, where FTX was at a peak of 0.021. So we're really nowhere near that. You can see on these lines where we are now for FTX and for Binance. We've come down significantly. They're both higher than average, but not in concerning range. So looking just fine on the funding rate side. As far as MVRV goes, I'll get rid of the 365 one. I think 30-day would be a bit more meaningful here.
Yeah, just while Brian is doing that, there's only 9 coins that have had, and this includes Ethereum, that have had an average of 5,000 addresses in the past 7 days on Ethereum. So it's definitely like, yeah, the on-chain activity has kind of flattened, but it's still like one of the most used coins on Ethereum. So it's not dead or anything by any chance. So go ahead, Brian.
Gotcha. Yeah, so MVRV 30-day, we're not quite in the danger zone here. You can see that 15% is marked here, and we are just under that. That being said, it is a bit riskier than usual at plus 12%. 0% would be dead even, and then negative would be less risky than usual. So we are in a mildly concerning stage, but not yet in the danger zone.
So yeah, that basically means that currently there's average profits of addresses that have acquired Link in the last month is 12%. So you know that's what this chart is telling you. Plus 12% is how much swing traders are currently up on their initial Link investment. Are they going to sell at plus 12% is what you need to ask yourself. It seems like typically they like to wait for a little bit longer, like between 15 and 20 based on the chart that Brian just showed. It all comes down to market context and current coin conditions, but yeah, it's a little bit inflated. Actually, Brian, can we look at the exchange metrics for Link? I'm curious whether there's any sort of actual increase in sell side pressure. So show us exchange inflow and show us daily deposits for Chainlink. So deposits are addresses that are being used to move Link to known exchange wallets. So we're going to see whether there's any sort of increase in the amount of daily transfers of Link to centralized exchanges. If there is, it could suggest that there are people that are more people than normal that are looking to offload their Chainlink bags, and that might be sort of a sign of a increased sell side pressure, like you can see happened back in May and also happened around that local top on September. At the moment, it seems like yeah, there's a slight uptick in daily deposits in the last couple of days, but I think it's still within normal parameters. So yeah, slightly inflated. Like the higher the price of Chainlink gets, and if there's a sort of a coinciding rise in daily deposits, I would consider that to be a slightly concerning signal for the short term. This sell side pressure. The higher the Chainlink price gets, if there's more sell side pressure, there's going to be probably less bulls willing to absorb that sell side pressure because they would be buying Link at a premium. So yeah, right now it's not that high, right, these deposits, but they are definitely moving into the upper zone a little bit. So what about the exchange metrics, Brian? What about exchange inflow in particular for Chainlink?
So both inflow and outflow are relatively dormant right now. There hasn't really been any significant movement going on since October 20th, which was around Bitcoin's all-time high. And then the price actually got to its local top on October 25th. I guess I would stand corrected because it did surpass that just today, which is likely why people are requesting some updates on it. But nothing special going on the exchange side.
So can you show us supply of link on exchanges overall? Is it growing or is it declining? What's the deal? So are people on network level, are they moving their link bags to exchanges or are they withdrawing it from exchanges? Okay, so they're actually moving it.
Looks like they're moving too, yeah.
Yeah. So that's also not necessarily a great signal for Chainlink. Generally speaking, I mean, there's no silver bullet as a metric, right? But generally speaking, seeing a price rise into rising supply of link on exchanges means that there's additional or inflated supply of link on exchanges. And in general, could also suggest that more and more people are looking to sell their bags. So what I like to see and what I have seen several times in the past is that the price actually what you've seen between November and August, right? You see this decline in the supply of coin on exchanges, and on the other hand, you see a exact opposite movement of the price. So as there's a reduction in supply or availability of link, there's a increase in its price action. That makes a lot of sense. Currently, these two metrics are going in the same direction. Not ideal. I would much rather have Chainlink's price action move upward, but its supply on exchanges move downward. That being said, like we've seen a minute ago, in terms of like daily exchange transfers, daily deposits, daily exchange inflow, it's nothing serious just yet, but you know, keep an eye on the metric. It seems like it's moving in the wrong direction a little bit.
Yeah, we can take a look at whales too, and just see what might be going on there. There's a bit of alpha when you look at Chainlink's, I believe it was 100,000 to 1 million. I'll check on that. It could actually be combined 100,000 all the way to 10 million.
Yeah, let's
looking at the millionaire. So 100,000 here and 1 million here. They're definitely both rising. Just curious what 10 million would look like. Okay, that's constantly going down, and that's where the majority of supply is. But the 100 to 10 would be interesting to merge together. And we do see a big drop, which is quite interesting. This has been a metric that's climbed pretty steadily over the past year, but just over the past week or so, we've gone from 25% of the supply down to about 23.6. So give or take, these whales have dropped about 1.6% of the supply that they were holding, or the total supply of link, I should say.
It seems like it's mostly gone to the last category of holders, so those between 10 million and above. So how many addresses actually hold more than 10 million coins, Brian? Yeah, so you can see sort of a mirror of this chart. So show us how many.
I'll check.
Yeah, I would guess not that many. Wait, so were you now showing us the number of addresses or the balance? Because now you're showing us the balance of addresses.
That should have been. Oh, I should go on absolute. That's why it's showing percentage.
No, I mean, moment. Yeah, but this is still just showing us the balance of those addresses. I was just wondering how many addresses actually hold 10 million and above. So what's the number?
Got it. Number of address. That's why.
Yeah.
So let's get rid of these. I know there's a shortcut to just get rid of all those in one go, right?
Yeah.
That's why.
So how many?
So number is just 11.
Yeah. So I mean, literally, what you can, guys, what you can do is you can go in the metric menu or metric tree here on the left. You can type top holders table, and actually, Brian, you can show them. So just type in top holders, and yeah. Yep, just apply that to any chart, or actually, yeah, it just applies itself. So then just take the, okay, it's already, no, this is showing the last year of data, who are the top holders. So just show us who are the top holders for the last like 5 days or a week or whatever. So this is from November 2020.
Yeah,
this is last
Friday.
This is last year though. This is 2020.
Oh, got it. That's why.
Mm-hmm.
This Friday to this Friday.
Yeah. So I mean, there's only 11 addresses that are seeing that are in this category, and this category is the one that is seeing the biggest inflow, right? So you can literally go through each of these addresses. Like Brian, just click on the first one so we can see what happens. We're not going to do it here because it will take a little bit of time, but sometimes analysis requires a bit of legwork. So yeah, show us, just type in the link, I think, in the assets. Yeah, just there we go. Yep. And in the cogwheel, just add the price. Oh, it's already added, right? So this address, whatever it is, we can open Etherscan and see. Maybe it probably belongs to the devs or something. It doesn't seem. Yeah, let's see if they have it labeled as something specific. Some sort of a smart contract. I can see
node operators.
Okay, so it's Chainlink node operators. Good. So generally speaking, this address hasn't received any additional coins recently. It's at a flat 350 million. So you can literally go through each of these addresses and identify exactly which address has received this inflow of link over the last couple of days. And based on that, you can figure out, okay, is this an exchange wallet? Is it a theme wallet? And you know, get more context about what's been really going on. Because yeah, Brian is right. There definitely seems to be a lot of new link being moved to these top 11 addresses. But the question is, which address in particular? Does this address belong to an exchange or does it belong to a team wallet? It's a very different story if there's a bunch of link being moved to like a Binance wallet, or if there's a bunch of link being moved to, I don't know, like a new project that they're doing or some sort of a staking mechanism or whatever. So yeah. Okay, I think we have time for one more, Max, before we go. What was the third one that people wanted to talk about?
Your choice of FTX token, FTT, or Strong token.
I don't know what's the name. Yeah, I don't know what Strong but yeah, let's look at Strong. I like looking at the coins that I know nothing about, just to see where we are.
Give it a quick refresh. It's getting a little slow with all the data that was loaded. All right, so I'm going to go back to the default template and we will open up Strong. And we'll just go last 3 months to start out.
By the way, guys, while Brian is setting up all of the charts, please feel free, if you like this type of content, number one, to like this video and to subscribe to our channel. We're trying to push to the 10K mark. We're at about, I think, close to 9K subscribers now. Yeah, it would be great to pass that 10K threshold, you know, get to a new all-time high. I like BTC. So if you enjoyed this type of content, make sure to share it also with other people. It would be great to have a larger sort of a chat here with more people on a weekly basis. So if you know, market analysts or people that like to learn more about what's currently going on with the market, share them this video. Say, hey, there are a few cool people that are talking about the market, and you can ask them questions every Friday. So yeah, just a reminder to show some love for the stream if you enjoyed the data. All right, so it seems like Strong is an ERC20 coin because we have some data for it. It doesn't seem like it's doing all that well in terms of its price action, so it's probably some long-term holder that's asking us about Strong. So okay, Brian, show us, tell us a little bit about what you're seeing.
Yeah, circulation, nothing too special. It peaked out about a week before it hit its all-time high. So it got up to about 36.6K Strong circulating, and now it's back to about 20.8. So that's not the greatest sign. If I were to just do a quick trend line on it, oh, actually it's already on. So yeah, you can see here in this faint pink line, the past 7 days, it is declining a bit, but it is still better than it's been for most of the past 3 months. So not the worst thing in the world, but it does look like this price decline is justified according to circulation.
Yeah, so these small coins, yeah, for these small coins, it's usually the daily active addresses that are a more interesting metric. So how many addresses actually use this coin daily?
Yeah, it's rising quickly, and right now it's averaging over the last, give or take a month or so, 2150 active addresses a day.
That's great.
Yeah, 2,700 in the last, just recently.
I mean, yeah, more power to Strong, man. I guess probably need to pay a bit more attention to it. I mean, I've heard of it, but honestly, just haven't really paid all that much eye to it. So 2,000 addresses on a daily basis, that's a lot, guys. You might think that sounds small, but you would be surprised how many coins on Ethereum have between like 0 and 200 addresses daily. It's most coins. It's most coins, guys. So 2,000, yeah, it like puts it into like in the gold tier of in terms of, at least in terms of on-chain addresses, like the network activity. So yeah, great. And currently it seems like the price is dropping, but the active addresses are rising. This I mean, it remains to be seen what this is about. If this continues to happen, it could be a bullish divergence if it's sort of a sustained growth in daily active addresses. But this latest spike in daily active addresses, I'm actually curious, could it be because people are selling off their Strong? So can we see, is there a spike in daily active deposits recently? You can plot it against the same chart as daily active addresses, just so we can kind of see. Yeah, active deposits. So,
whoops, not that one, this one. Active deposits, this one.
Yeah, so see that spike? Yeah, so this is what I thought would happen. Okay, now show us active addresses across this chart. It's all the way down, yeah. Actually, this is the
put them on the.
Yeah, probably use the rolling 24-hour addresses, because this last point of data is the one that I want to talk about.
Gotcha.
Yeah, and you can change the active deposits to like, I don't know, 6 hours or something, because, yeah. Okay, so what we're seeing, there we go. So see the spike in active addresses? You would think, like, on first glance, it would appear like it's just a lot of people using the Strong, and it seems like it's a decent uptick in network-wide activity. However, what's actually happening is we're seeing a massive spike in deposit addresses in particular. So it seems like quite a lot of this new interest in Strong, at least in the last 24 hours, is coming from addresses that are moving Strong to exchanges, right? So this is, in fact, new sell-side pressure, and I actually like this for Strong. Generally speaking, when you see these dumps, and you see massive spikes in exchange activity, it usually means that people are capitulating. People are super scared about the project's future, right? So sometimes this can actually mark a local bottom. And I think, Brian, hasn't it already like bounced back a little bit? If you zoom in, it seems like it's it's already bouncing back a bit. So yeah, I mean, that's okay. Well, it's definitely bouncing back slightly. So like I said, like you see price go down, and at some point during that correction, especially if the correction is very strong, you will see like massive spikes in exchange metrics, specifically in active deposits and exchange inflow. What that means is that weak hands are capitulating. They're saying, I'm done with this coin. I've had enough pain. Time for me to go and invest into something that's going to give me even more pain. So generally speaking, this can sometimes, especially if there's a lot of people or a lot of like holders still believing in this coin and willing to buy the dip, this type of increased sell side pressure while the price is declining, this can be scooped up very quickly. Like if there's people that are happy with buying Strong at a discount, this new sell wall sometimes can be very easily absorbed and move or sort of end up with a directional change. So I actually quite like the fact that its active deposits are high. Maybe it's now already too late to get into a trade. I don't know. But in terms of what I would say moving forward, right, this latest spike in active addresses is clearly mostly because a lot of people are selling Strong, right? So what you want to see moving forward, like take the next week, 2 weeks, several weeks, keep an eye on active addresses for Strong. If it's really this strong, pardon my pun, if it's really addresses that are on a like just regular day, there's an average of about 2,000 or more addresses. I think that's a very good sort of indication that the coin is healthy and that the network is healthy. It's not necessarily going to immediately sort of transform into price rally, but from a fundamental perspective, this is like, I would rather look into, I would rather have that coin than a coin whose daily active addresses are constantly declining. So I think this is good. Brian, can we also see exchange inflow for Strong? I'm curious how many people, like exactly how much Strong is being moved to exchanges currently.
Let me zoom out a little bit. Yeah. We'll do the last 3 months.
And just leave us with exchange inflow, and you can smoothen it off a little bit, or just take like the, I don't know, instead of the daily interval, take the 6-hour interval or something. Yeah, okay. So there's also a pretty big spike in exchange inflow today. Yeah, I mean, a lot of people seem to be selling Strong. So there's a bit of panic. You know, there seems to be blood on the streets. So it's not necessarily that this is going to coincide with the local bottom. Strong might just as well continue to dump. But sometimes we do see spikes in exchange-related activity while a coin is dumping, mark local bottoms. So we'll have to wait and see. This is the sentiment chart for Strong. It seems like, yeah, it seems like on average, the market is pretty sort of neutral to bearish slightly. What about social volume or actually social dominance for Strong, Brian? Like, is the crowd talking more about the coin or less about the coin? I would assume because it's dumping, there's not a whole lot of people talking about it, but let's just check just in case.
Yeah, pretty flat.
Yeah, so there's been a little bit of an increased chatter a couple of days ago. Right now, it's fairly neutral. So I don't know, maybe something happened a couple of days ago, so that's why people are asking us about Strong. But right now, yeah, most of this uptick in social mentions has gone away. So what I am seeing currently from these charts, this is just a couple of charts, but the vibe that I'm getting is that Strong is fairly used. Like on a network level, it's a pretty active coin. 2,000 addresses is quite impressive, especially if it's able to hold that level for a couple of more weeks. Currently, there seems to be a lot of people in pain in Strong. Actually, Brian, show us network profit loss. I'm curious to see whether it's up or down. Yes, all right, beautiful. So network profit loss is also very down today. What that means, guys, is it means that, so we're seeing two things here, right? We're seeing daily deposits and exchange inflow moving in the upward direction. That means there's more addresses moving Strong to exchanges, and there's more Strong being moved to exchanges. So overall, this all means that a lot of people seem to be maybe selling their coins. And then on the other hand, at the same time, we're seeing a pretty big dip in Strong's network profit loss. So what that means is that over the last maybe 24 to 48 hours, the coins moving, the Strong coins moving on the blockchain are moving at a loss relative to the last time that they moved on the blockchain, which the assumption was the time at which they were acquired. So what that probably means is that a lot of people that have bought Strong around this all-time high rally are now feeling the burn and are selling at a loss. So this all seems to point to a bit of a dumpster fire in terms of what Strong holders are currently feeling. A lot of capitulation currently in the market. Generally speaking, sometimes this can mark a local bottom and like short-term price recovery. It doesn't have to mean that it will. It's a risky endeavor always to try to capture bottoms. But yeah, a lot of people seem to be quite angry with Strong, which you know, from a behavioral standpoint and from a market standpoint, sometimes can be a good sign for its longevity. It seems like weak hands are moving out. If other people are strong hands, diamond hands are scooping up that sell side pressure, it could be an interesting time for it. Obviously, the exact opposite could also happen. So don't take this as a financial advice, but it's sometimes the pattern that I see with these coins. I don't know. It's still risky. What's the Mvrv ratio for Strong, Brian? Like the 30-day Mvrv?
It is underwater. It's at -7.5 right now.
Can you zoom out a bit more? Yeah, so it's not at a historical low or whatever, but it's at the lowest point since like what, July? Yeah, it's pretty good. It could drop lower. I think around like -20% is probably where the bottom lies, the real bottom. But yeah, it's still like currently the short-term holders are definitely underwater. They're feeling the burn. They could this MVRV chart could drop a more, like maybe 10% more before you could say, well, we're approaching these historically low levels, and that could mean that it's a possibility to accumulate. But yeah. But generally, what I'm seeing is a lot of pain on these strong charts. So sometimes this pain can be an indicator of a local bottom. Sometimes not. So I don't know. Just stay safe out there. All right. I think that's going to be it for us today. Guys, thanks everyone for joining the stream. The code is TWIC if you're not already subscribed to the platform and you want 25% off. So Max is going to flash it on the screen. Everybody that watches these videos, the name of the videos is This Week in Crypto. So TWIC is the acronym that you can type into the checkout and get 25% off Sandbase Pro. So everything that we've today talked about, it's all available on the platform for $49, and then you get 25% off if you use the promo code that we have for people watching these streams. We'll be back next week, probably mid next week, to talk about the market with a shorter video update. Brian, anything to add before we sign off?
Just want to remind everyone to like and subscribe to our YouTube channel if you haven't already. It is a massive help to us in getting the algorithm in our favor. So really appreciate you all for joining and looking forward to talking next week.
All right. Thanks everyone. I'm just reading the comments. Thanks everyone for sticking around. Yeah, we'll be back next week. If you want to talk to us in the meantime, we're on Discord. So Santiment, discord.net/sentiment. There's a link in the description of this video. Join our trading channels and let's talk more. All right. Thanks everyone. Talk to you in 7 days. Stay safe. All right. All right. Bye guys.